Hey, everybody. Welcome to week 186. And Jack is always mixing it up, so he's at the Shiloh Institution Baptist Church. Is that right? Something like that? Or it's
Yeah,
near that? It's a co-working space. Is that
it's
right?
it's a co-working space next to the church, and it's really cool. I would have never known this was back here, and so I just finished a not-for-profit board meeting, the last meeting for the year. So I just figured I would stay here rather than being in my car. So yes, that's
Oh,
why.
you're so good. Plus, you're giving a shout out to those guys, which is even better.
Yes, absolutely.
That's good. Well, as everybody's ramping on here, Adam and I are here at high atop the BGW studios because we had an all hands meeting as our December meeting. So that's good. Hopefully, the people will leave us some Chipotle because they decide to deliver at 11 o'clock. And so we're always the last ones to eat, but officers eat last, right? So that's how it goes. So anyway, there's there's some crazy stuff that is looming. Some you may know about and some you may not, but if you're on here, you're going to know about it now. So, Jack, I know you've been using your Cliff Clavin Google skills and you have been doing some research and you even have your research classes on. So maybe you can go ahead and kick it off to begin with.
Yeah, although I must say, I don't know if I like this angle. You can see my receding hairline better from here, but I guess it's better than seeing the bald spot from behind. So, okay, I'll just have to roll with it or lean down like this. Okay. All right. So, a couple things. Obviously, we're going to talk about the Supreme Court case with respect to tax code and recognition of income and payment of taxes, of those things. But there's a couple things that I thought I wanted to bring up because we've talked about them a little bit in the past. So, there was an article in the Wall Street Journal about ERC funds, refunds that the IRS put a freeze on sending those out. So back in September, the IRS said that they were stopping the process of making payments on ERC money, basically saying they wanted to give additional scrutiny to more than 600,000 pending requests for credit, which had cost the government at least 230 billion, which is roughly triple earlier estimates. Okay, so they
Wow.
basically have committed to giving out a lot more money than they thought they were going to give out. But there's all, which, and when you put together a program like this, like the other ones we've talked about, PPP and others, it is fraught with fraud and mistakes. So basically, what has happened though is that you have business owners that can't wait until this gets resolved. So what do? You go and get essentially a business payday type loan in the form of it's similar to what you would do when you factor accounts receivable, which is you sell the claim to a third party, and then they pay you cash, but they pay you at a discount of the dollar amount. And then once the payment is made, the the lender that you sold the claim to gets 100% of those funds. But and of course the discounted rate is part of what you're paying for the funds. Sometimes there's additional interest rate on that, and many times there is because they're essentially loaning you the money and collateralizing that loan with the claim of funds, in this case, the ERC funds. But with this freeze, that's what's had to happen. So then you have issues of what happens when or if the claim is denied or continues to be delayed.
Mm.
Then you have a business owner that essentially has a loan that has no way of repaying it, essentially. But what you have is these lenders doing risk assessments like anything else. But I just and to give you some examples, and it is the funds can be used for various things. So there's an example that says there's this person who has 28 Pizza Hut franchises in the Midwest. Last year used his ERC refund as collateral for a $500,000 loan from an online financing platform. And so he paid an origination fee. He's paying a low amount of interest, and he purchased pizza ovens for his locations. Um, the discounts of buying these ERC payments can go up to 20%.
Wow.
And then there are penalties associated with that. So, is this tantamount to being a loan shark, essentially? Now, I don't want to throw all of these funding sources under the bus and say, okay, they're all bad, because there are many that are legit. It's just that you need to be careful as to if you're going to do this, or if you need to do this, that know that stuff's available out there, but you just need to be careful when you're getting into those kind of things. The next thing that I want to talk about is that I saw a report that the FTC is scheduling hearings. The Federal Trade Commission is scheduling hearings for the beginning of next year, which is in a few weeks, to talk about click to cancel rules related to automatically renewing subscriptions. You think about that application to services, maybe Quicken or QuickBooks or some other service, but that would also apply to your marketing campaigns that you may have in place. Now, yes, there are rules. You're supposed to put an unsubscribe button in there, and you're supposed to do certain things, but this would also impact what you need to do in your marketing campaigns to make it easier for someone to get out of that. Or let's say that you have someone who's paying for recurring service, and it comes up for renewal, and you have what is commonly referred to an evergreen provision in your contract, which is it renews automatically unless there is notice to cancel, and many times comes with a period of time, a minimum period of time that you have to cancel, which is 30 days, 60 days, perhaps. So be mindful of that. And I'm sure we'll be talking more about that in the future. And then a really random but interesting thing I heard on the news this morning is, and we've talked about AI, we've talked about cybersecurity, and this is kind of a joinder of those things, which is the robocalls that you get and responding to them, using the recording of your voice to then do a scam, to perpetrate a scam using your voice. We've talked about that before, and we talked about technology. Some people say it's not quite ready. Others will say that it is very much ready and have done beta testing of that technology. I heard it on the news this morning, and then on WBT radio this morning, heard kind of a similar thing, which is the person, and she used to work at the White House and do cybersecurity. I can't remember her name. Her name's Teresa. I can't remember her last name. Maybe Peyton. But yeah, she said, is it what?
I think it's Paxton.
Paxton. Okay. So she was saying
it may be Peyton, but I know exactly who you're talking about.
Okay. And she's very good. She comes on, I think, every Thursday and has very interesting things to say about the technology and about scams and those kind of things. And what she was talking about today was and she went through and used a free program to fake her voice. And it was apparently used a very bad recording, and was able to, with people's inflections and other ways and their cadence, whether they talk really quickly or they talk slowly. So all those things. And so the technology is here. So this is kind of a public service announcement that, I used to, when I had a little more time, which is a long time ago, and I think do this sometimes, but they'd like to mess with people when they call and start, and they'll say, oh, well, so you have, I owe you some money. Tell me more about that, and wait a minute, you say you have my social security number. What is my social security number? So kind of testing them. The suggestion is don't even engage them for sport, or to make a point, or to waste their time, to feel vindicated that they're wasting your time. There are also recommendations were to each of the services. So like I have Verizon, they have a spam filter that will, my phone will ring, but it'll say potential spam. And so I don't answer those. So the things that you can do, but the warning is that do not engage them for sport. Just let it go. So that is your public service announcement. And then,
it is Teresa Payton, and her company is Fortalice.
Okay.
Fortalice, Fortalice. Yeah, she's sharp.
Okay. Yes, and maybe she now owes us a royalty for her free advertising on our program, right?
Oh
Right.
yeah. Actually, I think we've had her speak on some stuff before COVID, if I
Yeah.
remember right, on cybersecurity. So that's good.
Okay.
Um, yeah. All
And
right.
then
Well,
when you're ready, I can go into the background of what we want to talk about. But if you guys want to tee it up, and then I can give you the historical background of it that
yeah.
was published on.
Adam, why don't you give us a tee up the issue that's being argued right now?
Um, I will in a second. I
Okay.
think the other item of note that came out that was more of a pronouncement. It's like people, oh, it's just unfair. It's like it's actually kind of bullshit. You've been getting a low interest rate for a while, so you're welcome. From the U.S.
All
taxpayer.
right.
The IRS did raise the interest rate of what they're going to charge you if you pay your tax payments late. So to all BGW clients out there, when I used to say, look, you really ought to make your payments, but if you don't, it's not the end of the world. As long as you do ultimately, you're technically wrong, but it's not the end of the world as long as you do ultimately make them, because the interest rate is actually not that bad, that the IRS gives you on it. Um, Not today's advice. It used to be below market rate. Now it's slightly above market as a rate. So it's actually cheaper now to use the bank's money to make your tax payments on time and then pay the bank than it is to use the IRS as your bank
Wasn't it
to make.
3% to 8%? Is that what it
Yeah,
was?
yeah.
Yeah.
So it's gone up quite a bit. So that's just an item. But in terms of the item that's being debated before the Supreme Court, it's a good one, um, that has many different ramifications, which I'm really torn on, in terms of like I don't I don't know how I actually feel about this one, because I feel like it's one of those, man, I can see a case for, I can see a case against. On the specific case, I can definitely see the taxpayer's side and say that's BS.
Yeah.
But really what it comes down to is, you know, I make, you know, I make an investment in a foreign venture. So, Gary's down in Peru. He's like, hey dude, man, we've got this great opportunity down here in Peru. We're gonna be, feeding the locals as part of the deal, doing some great things for society. By the way, you'll make some money along the way. I'm like, yeah, that's sweet, man. I'll give you 100 grand. Go ahead and get started. So Gary gets started. He's highly successful at it. He's like, man, we're doing a lot of good down here, and we're gonna repour the profits back um into growing it and helping more people out. You're like, sweet, man, I didn't need that 100 grand anyway. You're good. You're good. Well, in the past, that didn't matter because it behaved for me no differently than if I'd invested in Apple. Apple did really well. The stock appreciated. Just because the stock appreciated, I didn't know any money on it. I didn't know any money on it until I sold it and got some cash.
Yeah.
Well, as part of some of the tax reform packages that have happened, oh nay nay, now I'm taxed on that foreign
Unrealized.
unrealized earning that I've had before, based on the character of the earning. Because in this case, it was really like real income that Gary made, not like appreciation in company value, like the Apple stock example. So the IRS imposed the tax. You know, were they trying to nail me and my 100 grand? No, they weren't. What they were trying to nail was Apple and its foreign investments, who are allowing those foreign investments to continue to grow in low tax or no tax jurisdictions, which costs U.S. taxpayers trillions. Like if you've got a company where it's like most valuable company in the world, you know, on the U.S. stock exchange, headquartered in, you know, Seattle, Washington, like one would assume correctly that surely they pay more taxes than Adam Boatsman. But no, Jack, oftentimes they don't. Because part of what makes them the most valuable company in the world is they've sheltered some of their earnings overseas. And prior to some tax reform packages that have happened, they didn't have to pay. They didn't have to pay taxes on that money. Now they at least need to pay, part of the taxes on it. So when you hear talk about like, and I'm sorry if I'm stealing some of your thunder, Jack, but when you hear talk about like the concept of a global minimum tax, which all the major developed countries in the world, including the US, even though it's not law, have agreed we should do, it's really going after corporations. I mean, it's not like they're not in high net worth individuals. It's not designed like they're not talking about like me and Gary, when they're talking about it. But unless you set up some guardrails, the unintended consequences, guess who's going to get caught in the net? Me and Gary. So they're really talking about how do we, how do we tax, foreign wealth accumulation. And the underlying issue in that is, well, if I can do that, it's sort of like, well, if I take away this right, what other rights could I take away? The other, I start now, guess what? I'm going to start taxing your gains, Gary, whether you realize them or not. The problem that creates is like, well, shit, I haven't, I don't actually have the gain. Like, it's still working for me. Like, where am I supposed to get the cash to do that? So anyway, that's the issue. So go, Jack.
All right, you didn't steal all my thunder, but that is a wonderful segue into what I'm going to share. But I also want to say that, kind of getting sort of to the end of the story, or, you'd said, okay, it doesn't impact us necessarily personally, but think about from the perspective of a business owner and the repercussions of a company having to pay more tax or do something that decreases their net profit. What is the natural inclination, gut reaction to do? Guess what? We as consumers and as business owner consumers are going to be paying more for stuff that goes into what we provide as business owners, whether they're products or services. So that is an indirect sort
So
of
to debate
quasi-direct
Jack for a minute
impact.
on that, the other side of that equation though is that if they paid more taxes and I paid a little bit more of a price, yeah, that sucks. But the theory behind that would be that the revenue base shifts from more for corporations paying more of the share. And in theory, they wouldn't do this, Gary, because they're all a bunch of assholes. But in theory, they should lower my individual tax rate.
Oh, that will never happen.
I just want to say, in theory, that's what should happen. Not actually going to freaking happen, but that's the theory behind what should happen. And at
Yes, I
least me
agree.
buying something is voluntary, whereas me getting stuck by Uncle Sam is involuntary.
Yeah.
Sorry, Jack.
Yes. No, no worries. No worries. I didn't know that we were sharing the bizarro world side of things as well in our discussion. So that's okay.
Yeah.
All right. So here is the background, and I'm just gonna, as you guys know, I don't like to read a whole lot, and I like to have more of an open discussion. But this is just pretty concise. So this came out a couple of days, and there's an update that came out as well. So it's the title of the case is Moore versus the United States. It challenges a piece of the 2017 tax law that imposed a one-time levy on profits that companies had accumulated outside the U.S., but its implications could reach much further. The underlying, and I will explain more. So this is a Washington state couple seeking a $14,729 refund. Yes, I said $14,729 refund. So that's where this started.
So not Nike.
Right.
No.
Right.
Right.
They pay no
Exactly.
taxes, by the way.
Yes.
They don't pay their laborers very much either.
Right.
The question is, must income be realized or received before it can be taxed? So this couple argues that when the law was passed, they hadn't realized the income from their investments in an India-based company and thus couldn't be taxed. If the Moores are correct, investors and companies could demand billions of dollars in refunds tied to this 2017 law. So here's more about that law, which is it's a piece of a 2017 tax law written by Republicans and signed by President Trump. The provision itself was relatively uncontroversial. Before then, U.S. companies paid foreign taxes on foreign profits, foreign taxes on foreign profits, but could defer any U.S. taxes until they brought earnings back home to the U.S., essentially. Republicans switched to a system with a minimal annual U.S. tax on foreign profits and tax-free repatriation. So you get to bring that money back over tax-free, which sounds wonderful, except nothing's free, right? So what was the price to pay for that? Which is in that transition to deal with the 30 years of profits companies had accumulated overseas that hadn't faced U.S. taxation, Congress imposed a one-time levy, which resulted in an estimated $338 billion in revenue. And it's being paid to Adam's point, by large companies such as Apple, Alphabet, and Microsoft. It does apply to individuals, but you have to own more than 10% of a foreign corporation. So, us ordinary people, everyday people I don't own 10% of foreign corporation as far as I know. So,
and by the way, the corporations were actually for this because, like, in other words, like it's not like they were jumping up and down and saying, "Oh my gosh, it's the greatest thing since sliced bread." But if given the option of, they would have liked it if they could just repatriate for free. But knowing that that was not going to be and never have to pay taxes on foreign earnings. But with that not being an option, the alternative was they were going to have to pay like 30%. So this was a good middle ground for them, because what ends up happening is that if I have money overseas, it's overseas. Like I can't use it to ramp up my domestic workforce. I can't use it to invest in property, plant, and equipment in the US. So I mean, overall, like it was a good, a good idea that corporations were for.
Yeah, it was a price that they were willing to pay to get the intended consequences, which was, okay, go ahead and feel the pain now and be able to bring that money over to use it, rather than being, as you said, kind of held captive over there so that taxes wouldn't have to be paid,
And
kind of thing.
And another wonky item for all the wonks that are on the call is that this expense had already been recognized on their financial statements years ago, because on your publicly traded company financial statements, you book income tax expense as if you had paid it. In this case, so like Nike or Apple, they actually booked income tax payments as an expense that they should have been paying all along, but they didn't because they're foreign earnings. So there's no impact on market value because these expenses were already baked into what they're reporting as their accounting profits in years past. So this is just like, well, now you're actually going to freaking pay the tax, asshole. I'm on fire today, Gary.
He has been on fire from the moment that he walked in the office today.
I don't know what happened.
Well, I'm glad you answered that question, because I was wondering.
Coffee a little bit strong this morning.
I was wondering how is that going to mess up books if you're paying for taxes that should have been, that are theoretically imposed from the past? But
it's all balance sheet. Cash goes out of the account to pay the tax, and then it reduces a deferred tax liability on your balance sheet. So there's no income statement impact.
Okay.
Now you know, Jack.
Now I know.
We all learned something new.
So I have not looked in the past 2 or 3 hours to see if anything else new has happened. I don't think so. I mean, it was probably heard, and the Supreme Court is not known for rendering decisions immediately unless it's an emergency situation. So we'll probably have to wait a little while to hear more about where they are will come out. But the initial indications are that they're probably not going to make any changes to the law, but that's just initial inclinations based upon the questions that were asked during the hearing, and only from that is interpretation of the justice's inclination based on the questions they asked. So
yeah, there's nothing new. The AP came out with just an update yesterday, which was a rehash of what had been released 2 days ago. So nothing released from the court yet.
All right.
Yeah, and I think, the point of note here, if you've got foreign earnings, like in other words, if you're in the same scenario as these taxpayers, is like, I get it that they're mad about it, because they didn't have to do it and then a law passed and now they do. Like, I get that they're mad about it. And again, we're not talking about the company appreciated in value and I've got to be taxed on untaxed, gains. This is like the company made money. If the company had been in the US, I'd have owed the taxes.
Yeah.
But it was not in the US. Therefore, I don't owe the taxes. And even though it paid taxes in India, I get a credit for those taxes back. My point in saying all that is, I don't know, Jack. I mean, it's sort of a legal question, sir, but I'm guessing most of your operating agreements have a provision that says, hey, Joker, at a minimum, if we make money, you're going to give me cash to pay the taxes.
Yes, absolutely.
Right. Because that's like the most, if you want to talk about the biggest way to ruin your Thanksgiving is allocate income to Gary and then don't give him money to pay the taxes.
Right.
So my point in saying that is hindsight being 2020, they should have said, hey, that's all great, but I'm going to need some money to pay the taxes at a minimum.
Yeah.
Which brings up another good point, and adjunctly or tangentially related, which we talked about, which is again encouragement to go look at your governance documents, because if that is not in there and you do not control or fully control the distribution of funds. So you typically have two provisions in an operating agreement. You have one that says who and how is going to allocate profits and losses. And then you have a separate provision as to who and how and what will actually provide distributions of that income. And so if there is a gap between the person who is not you or not fully you, meaning it has to be done by majority consent or supermajority consent, as to you could be in, so you could potentially be allocated something, profit, and then not get the money to pay the taxes. So, you would think that others, especially in an S corporation, so where you have to the distributions have to be pursuant to percentage interest. So if the majority controls the distribution or the decision on the distribution of net income, the determination of net income, and the distribution of that, then you would think that okay, they would want to do what they need to do so they don't have to pay taxes. And then if you're a minority or equal owner, that you would then have the benefit of that. So practically speaking, usually not an issue, but I know that Adam and Gary and BGW and Shoemaker and we have been in issues where we've represented owners who have been allocated profit but has not received cash in order to even pay the taxes, let alone the full dollar amount of what the allocation is. So just again, take a look at your governance documents. Put yourself in a position, between Christmas and New Year's, when you're chilling on the couch, and I'm totally being facetious. Hopefully, you're not dealing with work stuff, other than maybe prospecting for next year and thinking about putting together a marketing plan. But please do take some time off for your mental health. Here is your another public service announcement. But do go back and look at your governance documents and put yourself in the shoes that you are actually in, and put yourself in the shoes of the other person. If it's not equal, meaning if it's not everybody's a 20%, 25% owner or something along those lines, and just walk yourself through the provisions. Also walk yourself through the provisions of the succession plan that is embedded in your operating agreement. And I bring that up again because we've had an issue over the past 2 weeks with, well, that's not how I thought it was going to happen when my partner died. And, we have to do this and we have to do that. Yes, it's required. If your decedent partner's spouse decides that they want to keep the ownership interest and the operating agreement doesn't say otherwise and force a sale, guess what? You have a new partner. They may not be a manager, so they may not be able to or not be allowed to participate in management, but distributions, if you're taking one, then you got to give that other person the beneficiary distribution. So again, I don't want to, I hate saying beat a dead horse since my daughter's an equestrian competitor, but you get the point.
Yeah. Yeah, that's a really good point. So I'll give a plug for the Christmas to New Year's break. I think we mentioned it before, but on January the 5th, best year ever. It's a 3-hour session. This will be my 5th year doing it, and this is your umpteenth year doing it. Man, that is one of the best like head clearing exercises. I love it. I mean, so we're doing that for free. It's normally like $99 a head. Jim Dunn is doing that, and we're going to do it at BGW. If we need to do a second session, we will do that. But if you're interested in that, let us know sooner rather than later, because the room is already almost full. We can hold 40 people in that session. And so if we have to go over and we need to do a second session, we'll do it. But do yourself a favor, give yourself a gift, and it's me time, man. It's spending time in that. So hey, Lisa, cool. Just send me an email, GFREY at trustbgw.com, and I'll get you on the list. Okay. So Lisa, just send me that email and I'll make sure that we get you on the list and get you what you need on that. So it's really cool. I've got every one of my prior years. I look back and I'm like, wow, a lot of these things happened. It's really cool.
Cool.
So if I paid my $99, how do I get that back?
Gary will give you cash when you get
I'll give you Starbucks cards from Shoemaker.
I'm just messing with you. That's my way of reiterating this is for free, and you would be foolish to not sign up for it.
Yeah.
So there you go.
Yeah, I mean it's crazy. It's crazy how good it is. So
yeah.
Anyway,
I think if I could hit on one, I know I'm guessing the next webinar we're going to do is on some year-end planning ideas, but they're tax wise. But there is one that I wanted to hit on that came up today, just because if you did mess this up, then you need to go back and fix it, and you have the opportunity to go back and fix it with plenty of time. One of the most common questions we get asked is, okay, I'm starting a company or I have a company or whatever, I'm making money, may not be making, whatever the case may be. What should I pay myself? And that's a great question. And, now I get to be Jack. It depends. So the answer that I give people is that, and this applies primarily just to S corporations and C corporations. I mean, because partnerships, you take the money out and you're talking about the income character that you're saying. So, and most of our clients are S corporations. So, what should I pay myself? And you really have a couple data points to look at, and I wanted to clarify, what's the law? Well, meaning the tax code. Well, the tax code says reasonable. Have you found a legal definition of reasonable, Jack?
It depends on which side I'm at, but
yeah, exactly. Right. So what's reasonable? Well, you've got, I don't know what reasonable is. So what can we look to? What we can look to is tax court cases and audit results, because both have tested what's reasonable. So if I looked at tax court cases, what the tax court would say is that at a minimum, if a company made $100 before me taking a wage that's considered reasonable, I better be between 25 and 35% of that as wage. Why do they do that? Like there's all sorts of theories behind it. But at the end of the day, the wage is taxed at a higher rate than your flow through income distributions are. Flow through income distributions taxed at 80 cents on the dollar. So the highest rate you're ever going to pay is about 28%. Wages on a W-2, completely different story. Those could get as high as about 50%, when you factor in social security taxes, excess W-2, all that kind of not plus the ordinary income tax rate, all that kind of nonsense. So it's obviously always going to be better. Plus, now you can get a state tax deduction for paying your K-1 income through the company, whereas if it's all on a W-2, no tax deduction for it. So it got even better to have as low of a W-2 as possible, as high of a distribution as possible. But you got to pass the law, which is, 25 to 35% on the low end. So, okay, that's great. Awesome advice. So do I set my wage at $500,000 then? Because I killed it this year, Gary. Made $1 million. No, because then you get to the upper end of the spectrum. The upper end of the spectrum has two levels. Level one is at least the Social Security limit. Like that's going to pass the audit all day long is a Social Security limit. And this year, indexed for inflation, it's probably about $145,000. So there's upper limit number one. But then, you met with your financial planner. He said, well, I mean, your CPA is kind of a jackass. He didn't tell you about these retirement plans you can qualify for. You need blah, blah, blah. You should be saving money. Anyway, that was kind of saying flippant. We like retirement plans too here at VGW. But then you get to level two, which is the maximum amount I need to take to fully fund every bell and whistle on every retirement plan that's ever been invented. That's about 330 to 340 index for inflation from a salary perspective. That's it. You take $1 more than that, unless it's because you're trying to true things up with your partner and a W-2 is the only way to do it, you're an idiot. You can do it, but you're an idiot. So my point in bringing all that up is a lot of times business owners kind of set their salary and forget about it, and don't ever look at it again or adjust it. And if you're having a down year, there's a chance that you overpaid yourself. If you're having an up year, you may not be within, the parameters of the law, but I'd a lot rather have it to where you didn't pay enough than you paid way too much. So my point in saying all that is go back and take a look at what's your wage been relative to what you're looking like you're going to make for the year. Because every year we've got a couple cases where, hey, Gary, how'd you do this year? Oh, shitty year. I lost money. And then I look at your W-2 and you paid yourself $200,000 and your loss is 250. Guess what? You're 200, of your loss. You'll get your income tax back, but you ain't going to get your Social Security tax back. And at that level, that was, 18 grand of real money that you can get back by going back and amending your payroll tax returns and recharacterizing your income. The time to do that is prior to issuing your W-2. Like you can do it after your year end with your W-2 issued. It's just a bad fact. So we'd way rather that you fix that crap, up front before the end of the year rather than waiting till it's too late. So again, in summary, after my long tirade, go take a look at what you're paying yourself. Make sure it's right before you issue the W-2 to make sure that you're not overpaying yourself and overpaying Social Security taxes that you otherwise didn't need to pay.
We see that all the time.
Yeah, and I literally
every day
had a tax planning call yesterday where it happened.
Yeah, we see it all the time. A smaller company that's coming to us, and typically what happens, other CPAs get super conservative and they're like, well, half of it should be as W-2. Like, where did you get that number? Well, my CPA told me. And this one, I mean, it's $20,000 of cash that was in, and it's a smaller company. It's like, well, we paid for ourselves in just that thing that they missed, and it happens probably 90% of the time,
Yeah,
when
the
we're
new
looking
clients
at
come
it.
on board. Yeah.
So anyway, um, you guys have been silent out there. Maybe you've just been enjoying stuff. Maybe you're double screening it. I don't know. But Lisa, send me that email and we'll make sure that you get invited to the best year ever. And it's 8:30 to 11:30 at our offices here in South End, 1616 Camden Road. So it'll be good. And uh-oh, somebody's trying to get me internally, and sorry, but I can't add. All right, thank you, Lisa. What else from you guys' standpoint?
I don't know if you want to talk about this. I heard this on the news and don't know if it is how accurate it is, but
Anything on your mind? So we'll go, you know, we'll go deeper into year-end tax planning again next year, so it's fresh in mind. Whether you're a client of ours or not, it doesn't really matter. You should be doing tax planning, and hopefully you're doing some tax planning along the way and not just waiting till the end of the year, because for example, on how you're taking your income, yeah, you can affect this last month if you were taking too much as W-2, but where it really comes into play is next year. So just another thought.
Gary, can you hear me? Okay.
Oh, hold on. I was missing. I can't hear you,
Can you hear
Jack.
me now? No?
It may be my speaker.
All right. How about now? How about now? How about
Hold on.
now?
I'm going to go back
Now,
to,
now.
here we go.
Check, baby. Check, baby. 1, 2, 1, 2, 1, 2, 1, 2.
Oh,
Can you hear me?
yeah, it was my speaker. Somebody trying to call me internally messed up my Bluetooth, evidently.
Okay. No worries. So I also heard on the news this morning, I don't know if this is true, but that the Social Security Administration has paid out more than it should have. And I don't know if you guys have heard about that. I mean, and that maybe in the near future that someone is going to be knocking on people's doors who have received money. And I mean, it's like $1 million for this year and $1 million for last year, I believe, that has been overpaid, or maybe more than that. Have you guys heard anything about that at all?
I haven't.
Yeah, so um that actually did happen to some people. Meaning like not people that I know, but I actually read an article about the government saying, "Hey, we overpaid you your benefits. We want some money back," and then issued like a demand letter for like, I mean, it was a lot. It's like 50 grand off people that were collecting like 30, 40 grand, a year in social security
Oh
benefits. And
man.
they just miscalculated, gave them too much money. It's like, these people, like, they actually have to repay the money. It's like sell the house, type scenario, which is not great. Which again, it was the government's mistake. As a U.S. taxpayer, I don't believe that we should be collecting back errors that we made from people when they don't have the means. Just
No.
my vote. I will gladly pay an extra penny in taxes to make sure that this couple does not lose their house.
Yeah. Jack, say something, because I just tried to connect my
Oh,
speaker.
how about now?
Yeah, we're good now.
Yeah. All
Yeah, we just
right.
had to reboot that little Bose speaker. All right. Any other questions out there? So here's what you could do as far as homework to get the most out of next week's session. Feel free to send me an email with your questions. You can remain as anonymous as you want, but we'll tee them up and we'll do those on the front end of next week, if that makes sense. So if you got questions, no question is a stupid question unless you don't ask it, but relating to year-end tax planning, or if you got a legal question, we won't give you advice, and Jack won't either, but he has opinions. And most of
Perspectives.
it depends, but you can actually get some great opinions from Jack and from us. So anyway, All right, last call for questions. And anybody that came on here late, just as a reminder, we will put this recording back up on the BGW CPA YouTube channel later on this afternoon. So if you missed the front end, that's cool. You can always watch it again, or if you missed something and you said, hey, I want to get some clarity on that, that's cool. That's a great way to do it. So just do that.
And the Shoemaker YouTube channel as well.
And you have a YouTube channel now too. That's awesome. You probably had one before we did.
Not personally. I adopted it because I was following your lead. But I will say that I'm gone back. Well, my crew has gone back, and so there are some things that, you know, if people want to go back and look. I mean, we've talked about the anatomy of a deal. We've talked about some things that are not time sensitive. I mean, the things about PPP and forgiveness, those have been removed from my YouTube channel. But, you know, some things that are timeless, essentially, are still on there for people to take a look at.
All right, that's great. And they just Shoemaker, or is it you personally looking up Jack Santinello?
Yeah, the easiest way would be go to my bio on my website, and then there's a little button that says YouTube, and then it'll bring you to the YouTube page. Is probably the easiest way to do that.
So go to Shoemaker.
Yeah.
Website, look up Jack Santinello. Are you an Esquire? Do you have the ESQ?
I don't officially. I sometimes my assistant will put that as, you know, at the end, but yeah. Kind of like we can use Esquire. We're not permitted to use doctor in front of our names, so which is fine.
Yeah. Well, I like calling you Dr. Jack, but all right. So
Dr.
anyway,
J.
Yeah, Dr. J.
Yeah. The other Dr. J.
That's right. The other one. Yeah. The shorter and more handsome. I'm just kidding. All right. Hey, and remind everybody, if they came on late, what's the name of the place, the WeWork type place that you're using? It's not WeWork, but it's a co-working place.
Yeah, it is I'm looking at it, the Do Greater Charlotte co-working location. It is off of Wilkinson Boulevard, sort of ish, and it is
Shiloh. It's close to Shiloh.
Yes, Baptist Church.
Yeah, cool. All right. Well, thank you for what you do there, Jack. Everybody, thank you for joining us. Next week, 187. Not that we're keeping score, but we are. It's just too much fun now. So, all right. Have a wonderful rest of the week, everybody. Thanks for taking time out of your day to join us. See y'all.
Thank you.
See you, Jack.
Bye.
Bye-bye.
See you guys.